Hello viewers, in this lesson I'm going to explain you adjusted trial balance and adjusted journal entry at balance sheet adjustment. First of all, we have to know when balance sheet adjustment happens. Balance sheet adjustment you have to prepare or you have to record at the end of month. So there are two type of financial incident or journals happens in balance sheet adjustment. One is normal journal entry and another one is adjusted journal entry. So to know about normal journal entry, to understand the normal journal entry, please watch these videos from journal entry 01 to journal entry 04. So in this lesson, actually I'm gonna focus on more this one, adjusted journal entry, which has connection of previous financial transaction, as it has it's not new transaction, so that therefore it has no GST at all. So there are actually mostly four types of journals in balance sheet adjustment. One is prepayment, another is accruals, third one is, or could be the last one, is revenue received in advance. Let me talk about prepayment. What is prepayment? Prepayment, mostly we know prepayment is a prepaid expenses, which is current asset. So it's not expenses, it's an asset. But what is prepaid cost of inventory? Let me explain you what is expense. Expense is like rent expense, salary expense, insurance expense. But what is cost? Cost is like purchase of asset. So what is the difference, like basic difference between expense and asset, or expense or cost of asset? So expense is just gone case. You are not gonna get anything in future for the expense, but the assets you will get a benefit in future from the asset. So when you so over here, prepayment, both are prepayment and both are assets. Now in adjusted trial balance, you have to calculate or you have to identify how much money is still prepaid or still, prepayment. And in journal entry, you have to, the asset of old debit will be given, and you have to identify the asset of new debit. Actually, asset of new debit you will find from the adjusted trial balance. So asset of new debit, actually you can find from the adjusted trial balance. Over here you can see the writing of black color and writing of blue color. So the black color writing represents the question, whereas blue color writing represents the answer. So let me read the question first. So over here on first exercise, you can see trial balance as at 30 June 2012, where prepaid insurance is 1800. So remember another thing, if you see the prepaid expenses, you have to look for the expenses as well. Suppose here prepaid insurance, so you have to look for the insurance expense in the trial balance or in the adjusted trial balance. Similarly, if you see the prepaid rent, you have to look for the rent expense as well. So over here, the prepaid insurance is the annual premium for insuring commencing 1st January 2012. Remember, gone case are expense, but which are not gone case, which will give you benefit in future. Over here, benefit in prepaid expense means you don't have to pay in future, so that means it will give you benefit. But gone case means just gone, don't have to think about it. But prepaid expenses means in future you don't have to pay anyway. So the prepaid insurance annual premium for insurance commencing 1st January, and you are doing the trial balance as at 30 June. So 6 months gone, right? So 1800, 6 months gone, it means half of the money gone. So half of the money is 900. So remember, $900 is still prepaid. Still prepaid expenses. So why you are doing this? Just go here. So that's your formula, which is over here. Need to calculate identify how much money is prepaid. So those 900 is like a gone case. 900 you don't have to pay in future, that's a prepaid insurance, but 900 is a gone case. Gone case means insurance expense. So this 900 you have to add with the 600, which is the given the expense, which are 1500. So 1500 gone, and that's the insurance expense. So over here you can in like most of the time always prepaid expense and expense debit and prepaid expense credit. So how to get this money? I mean, how to get this thing to 900? So go back to this here. So in journal entry, asset of old debit minus asset of new debit. So asset of your old debit is 1800, right? So asset of your new debit is 1900. So if you deduct 1800, if you deduct 1900 from 1800, you get 1900, right? So that's your journal amount. And over here another thing, insurance expense, that's an expense, and expense increase, that's why expense debit. But prepaid insurance is an asset, and asset decrease, that's why it's a credit. Let me look on the second one. Second one is very similar with the first one, but just a little bit difference. The main difference is this one commencing in 1st January, and you are doing trial balance, I mean adjusted trial balance, and 30 June, so 6 months gone. But over here you can see the insurance is policy for a year, so it means you have to know that you prepaid insurance on 1st of June, so you are doing adjusted trial balance on 30 June, so already 1 month gone. So still your 11 months of prepaid insurance is prepaid, is still prepaid. So how do you get this? So just divide 2880 divided by 12, 2880 divided by 12, you get 240, right? So you just deduct 240 from 2880, you get 2640, which is still prepaid, but the only gone case is 240, which is your insurance expense. So you know the journal, right? So just deduct debit of, just go here, asset of old debit minus asset of new debit. So just asset of old debit minus a new debit, that's your journal amount. That's easy, eh? This one is a prepaid rent. So prepaid rent is a prepaid expense which works exactly like prepaid insurance. So I'm not gonna talk about this one. I think you will understand this one. Anyway, let's jump to this one, which is exercise 4. So this is actually like a prepaid cost. So what happens here? Supplies on hand at the beginning of the month were 3,000. The agency purchased additional supplies during the month, 2,500 in cash, and 2,200 of supplies was handed 30 September. So you know, you have to identify, or you have to calculate, you have to identify or calculate how much money is still prepaid. Okay, so go here. So they already gave you $2,200 was at hand at 30 September 2000. So you already got this from, you have to identify how much money, not how much, how much is still prepaid over here, how much is still on your hand, how much inventory, how much supplies, how much something goods on your hand. So over here you can see 2,200 on your hand. So your total cost will be 3,000 plus 2,500, which is 5,500. So difference from this amount to difference of that amount, that's your expense, right? The gone case. And this is your asset, but this one is your expense, right? So same thing. So asset of your old debit and minus asset of your new debit, you get 3,300, which is your journal. So journal supplies expense. So expense increase, but asset, this one is an asset. So asset decrease. That's why it's a credit. That's all. Thanks for watching my videos.